Welcome to The Explainer. Today, we're jumping into a really technical topic, but a super important one: taxes for people in a combat zone. You might think, okay, soldiers get a tax break, and you're right, but what about the thousands of civilians working right there with them? That's where things get complicated. We're going to do a deep dive into the nitty-gritty of Internal Revenue Code Section 112 and figure out exactly who gets this tax exclusion and, just as importantly, who doesn't.
All right, so here's our game plan. First, we'll look at the cornerstone law itself, Section 112. Then, we'll see who it actually benefits. Spoiler, it's military only. That leads us to the conflict for civilians. After that, we'll check out what other options civilians have. And finally, we'll pull back the curtain on how the IRS actually handles all this stuff.
Okay, let's get right to it. Everything we're talking about today is built on one piece of law: Internal Revenue Code Section 112. This is the statutory foundation, the absolute bedrock for the combat zone exclusion.
So first, we've got to define our terms. What is a combat zone? It's not just a general term for a dangerous place. For tax purposes, it has a very specific, very legal meaning. It has to be an area officially designated by the President through an executive order. As you can see from the citation, IRC Section 111C2, this isn't a suggestion, it's the law. And that designation is what kicks off all these tax rules.
All right, now this right here, this is probably the most important slide for our whole discussion. The definition of member of the armed forces. The law is incredibly precise about this. It's a term of art, as they say. And here's the absolute kicker, straight from the regulations. It explicitly excludes civilian employees, defense contractors, and humanitarian workers. Game over, right there. This single definition is the gatekeeper, and it's the reason we're even having this conversation.
Okay, so we've established who's out. Now let's focus on who's in: the uniformed personnel who actually benefit from Section 112. And you might think it's just one simple rule for everyone in the military. But no, it's actually a bit more complicated than that.
So what the law does is create this two-tiered system. It's really interesting. For enlisted personnel and warrant officers, Section 112A is clear. The income exclusion is unlimited. All their compensation for service in the zone is tax-free. But for commissioned officers, you look at Section 112B and bam, there's a cap. It's limited to something called the maximum enlisted amount. It's a pretty stark difference.
And speaking of warrant officers, here's a classic tax law curveball. You see the term commissioned warrant officer and you think, okay, commissioned, they must fall under the officer rule with the cap, right? Wrong. The Treasury regulations are super specific here. For the purposes of Section 112, they are not treated as commissioned officers, so they get that amazing unlimited exclusion just like enlisted members. It's one of those little details that can make a huge difference.
So we've been talking about this maximum enlisted amount cap for officers. What does that actually look like in real dollars? Well, to give you a concrete example, back in 2011, that number was about $7,714.80 a month. And this isn't some random number. It's calculated based on the highest enlisted pay grade, plus things like hostile fire pay. So as you can imagine, this figure changes over time as those pay scales are adjusted.
Okay, another key definition: what counts as excludable compensation? It's actually pretty broad. We're talking basic pay, of course, but also imminent danger pay, hostile fire pay, even re-enlistment bonuses, as long as the re-enlistment happens in the zone. Same goes for school loan repayments and awards. If they're earned there, they can be excluded. But there's a big red line. What's out? Pensions and retirement pay. That's a definite no-go. All right, so we've got the military side down. Now we get to the heart of the matter, the real conflict here. What about all the civilians? The defense contractors, the federal employees, the people who are right there shoulder to shoulder with the military but don't wear the uniform. How does the law see them? I mean, this quote really just says it all, doesn't it? The substantiation of tax-exempt civilian wages earned in a combat zone is, strictly speaking, a null set under IRC Section 112. A null set? In plain English, that means it's an empty box. It doesn't exist. According to this specific law, there's just no such thing.
And it's not just a quote from some analysis. The law itself is crystal clear on this. The benefits of Section 112 do not apply to civilian defense contractors or federal civilian employees, period. The regulations are right there in black and white. There's no gray area here, no wiggle room. It's just not for them.
So this naturally leads to a really important question, right? If Section 112 is completely off the table for civilians, is that it? Are they just left with no tax relief at all, even though they're serving in a combat zone?
Well, not exactly. There are other options, but they're a whole different animal. So let's dive into these alternative relief provisions. We're going to look at 3 main sections of the Internal Revenue Code that civilians can potentially use: Section 911, Section 7508, and Section 692.
Okay, so the big one, the primary tool for civilians is IRC Section 911. This is the Foreign Earned Income Exclusion. Now, this is a powerful tool for reducing your tax bill, but it's not automatic. You have to actively claim it by filing a Form 2555, and more importantly, you have to qualify under its very strict rules.
So how do you qualify? Well, you've got 2 shots at it. The first is the bona fide residence test. This is for people who really truly move to and set up a home in a foreign country for a whole tax year. But for most contractors, the one that applies is the second option, the physical presence test. This one is just a numbers game. You have to be physically present in a foreign country or countries for at least 330 full days during any 12-month stretch. It's all about counting the days.
Now, here's some relief that actually applies to everybody in a combat zone, both military and civilian support personnel. This is Section 7508, and it's all about deadlines. Basically, the clock stops on a bunch of tax-related things while you're there. We're talking filing returns, paying taxes, claiming refunds. The IRS has to ignore the time you're in the zone, plus another 180 days. It's a really significant benefit.
And then there's Section 692. This is, of course, for the most tragic of circumstances. It provides for the complete forgiveness of federal income tax if a U.S. military member or a U.S. civilian employee is killed as a result of military or terrorist action. This is the ultimate tax relief, designed to help the families left behind. And again, it's important to note, this applies to both military and civilian employees.
Okay, last section. Let's pull back the curtain and look at the procedural side of things. How does the IRS actually manage and verify all of this? How do they know who's in a combat zone, and how do they tell the difference between a soldier who gets the Section 112 exclusion and a civilian who doesn't?
Well, for members of the armed forces, it's actually pretty slick and automated. The Department of Defense reports any combat pay on their W-2 form. Specifically, it goes in Box 12 with the letter Q next to it. That amount is not included in their taxable wages in Box 1. So for them, substantiation is basically built right into the system.
Now, this is a fascinating little piece of IRS procedure. On their internal systems, the IRS can place something called a C-freeze on a taxpayer's account. For a service member, this freeze does 2 things. It stops any collection or audit activity, and it confirms they're eligible for the late filing and the Section 112 wage exclusion. But here's the critical distinction. A civilian might get that same C-freeze on their account. For them, it justifies filing late under Section 7508, but, and this is a huge but, it does not substantiate a claim for tax-free wages. It's the same code, but it means 2 very different things.
So, let's just put it all together in a quick comparison. As you can see, when it comes to deadline extensions and the tax forgiveness for those killed in action, military and civilians are treated the same. But look at wage exclusion. For military, it's a yes under Section 112, substantiated by that code Q on the W-2. For civilians, it's a no under 112. They have to try and qualify under Section 911 using a whole separate form. The paths are just completely different.
And that brings us to the final, big-picture question. The tax law, as it's written, draws a very, very rigid line. You're either military or you're civilian, and the rules are completely different. But, as we all know, the nature of modern military operations is changing. The roles of civilians are more integrated, and they often share the same risks. So the question we're left with is this. Does that rigid distinction in the tax code still reflect the reality on the ground? It's a tough question, and one that's definitely worth thinking about.